This is another episode of me documenting the day-to-day process that I'm taking to achieve long-term consistency in the financial market. And today is a green day. We got a little bit of good, a little bit of bad. So let's get into it. But before we get into it, let's talk about a little bit of changes that I'm making this week. Well, yesterday, the only reason that I came back and break even, recovered the intraday drawdown that I was in, was because I took off early. I didn't overstay my welcome. I knew that the downside move was not likely to last. I got in and I got out, targeting a low-hanging fruit objective. Sold here, took off at simply half the range, then look what happened after that, right? The market pushes back up. It would have came back and stopped me out for break even had I not taken off. And then if we look at today, again, kind of a similar thing that happens today. If we look at the trade that I took today, bought here, sold here. What happens if I don't take off and I overstay my welcome? Well, the trade comes back on me for break even, right? So a huge lesson that I'm learning this week that has basically been plaguing my trading for the past couple of weeks, if not months, is pay yourself. Pay yourself. Seriously. And I think the reason I have not been paying myself is, number one, because I'm in drawdown, and the way that I trade when I'm in drawdown is different. I don't trade the same. Every trade that I take, I'm trying to catch a huge swing to eliminate as much drawdown as I possibly can. And number two, the second thing is probably an ego thing. I really believe I am more worried about being right in my analysis and having the market do what I anticipate it to do than actually making money. Like, that matters more to me. And it hurts me more when I'm wrong than it does when I lose money. And because of that, the model that I've created, what I have built, I'm going for huge R multiple trades and huge swings intraday in price. And doing that, you have to be very, very precise about what the market gives you. I mean, you have to be correct basically all the time, which is why I have such a low win percentage. Because most of the time I do get it wrong and the market doesn't deliver what I am looking for. So these huge swings that I'm demanding for the market and these high R multiples has been plaguing my trading because of my ego. I'm not taking off and I'm not paying myself, and I'm demanding huge swings. I'm demanding the market does exactly what I want it to do. For example, if we pull up a trade from last month, it was a solid trade that should have literally been $300 in profit, locked in and secured on my funded account. If you look at the running P&L, I was up $360 at one point on this trade, and it came all the way back from break even simply because I want the market to deliver the exact level that I'm looking for, and it never does that. So I ended up selling at 9:30, somewhere in here. I was going to take off here at Monday daily low. It came just a few points shy of that and then retraced all the way back and stopped me out for break even. Then it delivered. I'm not locking in equity, and that's the problem. And the only reason that I'm up this week is because I am locking in equity, and I'm just trading in a demo account, and I'm just focused on small, tiny moves. That's it. And this way of trading is really, it might sit better with me. So I feel like the more trades that I take, the more trading days that I have, I grow closer and closer to understanding exactly what it is that I'm trying to do. I grow into the way that I trade. I grow into my trading personality. And what I did today was so easy. I was just in and out and done. That's it. That's it. But like what I said earlier, my ego has been getting in the way. And because of that, I'm making trading a lot harder than it has to be. I said in the last video, I should literally be a profitable trader right now. I should be up on my Express funded account if I would just lock in equity, if I would just pay myself. And it's the same thing my brother was talking about. He's trading crypto right now, and I'm helping him with that too. But he's had many, many trades come back on him for break even or even a loss simply because he's not taking profits, not taking partials. And that is what has been plaguing my trading. Now, this week I'm doing the opposite of that, and this is the result. It's Tuesday. I'm up. Let's not look at dollar amount because it's a demo account. Let's look at R multiple because that's what actually matters. I'm up 2.5 R, and it's Tuesday. So it's good. It's good. That's all I need, right? I just need to feed myself, just consistently pay myself. So that was a pretty long monologue. Let's get into it. So how am I feeling? Really had nothing worth mentioning for how I was feeling going into today. I was looking for my bullish premium gap opening setup where the market has a gap up opening, and I'm looking for continuation. So this is previous day settlement here. This is today's open at 9:30. We gapped up, right? If we toggle on regular trading hours, we have a gap up opening. So I'm looking for the market to gap up and continue higher, and it does. So going back to the pre-market analysis, higher time frame narrative, just keeping it very simple based on yesterday's close around the daily BISI or bullish for value gap. I'm anticipating today to be bullish. This weekly range is also likely to paint bullish, as last week closed on its high, still on the buy side of the curve, reaching back into smooth highs left on the drop down. So by that, what I mean is, here's a weekly chart. Here's my annotations at 9:04. So this is pre-market, before the market opened at 9:30. I'm noting how we cleared this major weekly low here, and then boom, large up candle literally closes on its high. That's bullish. The following candle, this week's candle, opens, trades down into that down candle. Now we're seeing some form of discount sensitivity. It's finding support there. We could climb back to a new all-time high. So I watched ICT's recent lecture, his recent live stream, and it reminded me of a couple of things. Yesterday I was trading blind because I had no perspective of the weekly time frame, the daily time frame, or where that's going. So watching that lecture gave me a reminder. You have to be in alignment with where is that weekly chart going? Where is that daily chart going? And if I look at the weekly, I see this information. We cleared this major low here. We left the wick there. Following candle is a large up candle. So this one, we're likely to be bullish. The probabilities are leaning bullish. So again, daily candle trades down into bullish fair value gap, right? But it closed above it and it left a discount wick into it. That's extremely bullish. So grading this discount wick, now I want to see on the lower time frame, do we see discount sensitivity there? And we do. On the 4-hour, notice how the bodies close in the upper quadrant of yesterday's daily discount wick after it gave us the reaction. Where did the body stop? Here, here in the upper quadrant, and then that produces a large up candle, overlaps the down candle. This is looking bullish. So I'm thinking PDH. PDH is in my crosshairs. That's what I'm aiming for. And above that, I would like to see the market trade into the consequent encroachment of this premium wick, just simply because it's the longest one relative to this one. This one, it's the longest one. It stands out. So I'm using that as a potential target beyond previous daily high. But that also ended up allowing me to frame the trade that I actually took and put logic behind that on the hourly. This is what I really liked about today, and I'm just going to show from the chart because it's easier. But go to the hourly, and what do we see? This is what I really liked about how today's set up. Let me take this off here. Do that, okay? So again, on the 4-hour, I noted how we close in the upper quadrant of yesterday's daily discount wick. We do the same thing on the hourly. So 4-hour, 1 hour, they're in agreement. We have this low here. That low is punched out here. We have another swing point, which is punched out here. And we have another swing point that was punched out here. So now we have 1, 2, 3 consecutive runs on sell side, and then boom, large up candle back inside the range. That's bullish. And this is also after rebalancing the impulse swing that we made yesterday. So this is what's happening in a discount of the prior impulse swing that we have. That's very bullish to me. We have multiple consecutive runs on sell side, and then it produces new strong bullish order flow. Going into the open, what do we see? 7 o'clock candle trades down into new bullish fair value gap and closes above it. So it's basically the same thing that we saw in the daily time frame, right? Markets are fractal. If we do this, if we put quadrants on it, it's the same thing that we see on the daily. Let me get this off the daily. So again, dropping down into new bullish fair value gap, closing above it with a discount wick, grade that, and then we see the respect of the upper quadrant, which is exactly what we have here. In this case, we just drop down into it, we tap the fair value gap again, and then boom, large up candle. What really confirmed the long idea for me was the fact that we laid a large up candle across previous daily high on all time frames. So all time frames are telling me bullish. Continuation. If we're leaving a solid ass candle across previous daily high, I'm looking for higher prices. I'm not looking for lower prices. So 15-minute time frame. Again, large up candle laid over top of previous daily high. That's bullish to me. So all we needed for another up move was just a little drop down, a little run on minor sell side here. Tap the hourly fair value gap again, and then boom, up. So this market is really bullish because all we need is a little minor run on sell side here. Little tap of the fair value gap there. We do not trade to the upper quadrant of the opening range gap, which is extremely bullish. So everything here is telling me bullish, 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 bullish. So how did I take a losing trade today? This shows that I still have the problem with 9:30 sells. I literally cannot stop selling the market in the first 10 minutes of market open. That's a bad habit that I've developed because it's paid so well in the past, but this condition has flipped, and that's not the setup that this market is providing at all recently. It has not been there at all. I do have a playbook where I'm selling the market at 9:30, and that shit pays sometimes. But that's not the case in this condition. I'll pull up an example of when it does pay. I believe I have an example of that on my Express. No, probably not on the evaluation though, for sure. I think this was a good example of that, right? You can see that I'm literally selling short at 931, and that shit paid. It paid big time. I literally bought the low a day. So if you think about it, and we're going on a tangent here, but this is definitely something that I have to talk about. It's trades like this that feed my ego. It is literally trades like this that feed my ego. And then I start to look for this kind of move again. I start to demand this kind of precision from the market again. So if I'm being honest, if I'm being real myself, trades like this destroy my trading in the long run because it's so precise and it's so perfect that now that's what I'm looking for going to every single following trade. Now I'm going into the next trade looking for this same kind of precision, but very rarely does the market ever actually give you this kind of precision. And when it does, for the most part, you probably just got fucking lucky, right? This is kind of eye-opening. Like, I'm just now thinking about this shit. But I'm selling here at 930, and this is a day where the 930 playbook plays out, and it pays very, very well. Because this shit pays very well, I keep going into the market hunting this shit. That's why I sold the market today at 930. But buying here and literally buying back at the low a day, getting out at the level that I think the market can deliver, does not do you well in the long run, because that's when I hold for these huge swings, and that's when I refuse to take partials and do this and do that, and just leads to all kinds of mistakes. But today I do the opposite of that. So the first trade, I'm selling short. I'm going to pull up the recording. That's actually a huge takeaway that I did not think of at all. It's trades like that that are literally perfect that don't do you any good in the long run, because you're going to go into following trades looking for that same kind of precision, and the market's not going to give it to you. And you're going to refuse to take off where you know you should, because you're demanding that the market gives you that exact level that you're looking for. So here's the sell here. Reason that I sold the market short was because we had this fair value gap here, and you know I'm looking for higher prices, right? But this inversion fair value gap created right before the market opened here. I'm thinking that the market could rebalance the range here, this is what I was looking for initially going into the open, right? I wanted to see a drop down, rebalance this impulse swing, offer a discount, and then look to buy it. But it didn't do that. This market is very bullish. We just need a minor run on sell side, and then it goes. So I wanted to see if I could play the market down and then up, which is something that I should never do. I'm going in today bullish, and I'm selling the market. Never, 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 never something I should do at all. So that's a quick loss, in and out, boom. But we can talk about the win that I did end up taking and why that made sense to me and why this was a good trade in my eyes, even though it was just like a little minor scalp. Something that I'm not necessarily used to, but I'm getting in and I'm getting out and I'm being done, and that's it. It doesn't have to be any harder than that, and I've been making it harder than that because I'm trying to go for these big-ass fucking swings and demanding that the market give me precision every single trade, every single time. And that's what leads to frustration. That's what leads to my win rate being so damn low that I literally made a joke about it yesterday where I'm going to make an indicator that does the opposite of every single trade that I take, which would not have worked out in today's session. But what I see, in the first 10 minutes market open, what do we have? Well, in the first 15 minutes, really. We have this large gap. And this is something that I see repeat in this kind of condition when the market is very bullish. When it produces a large obvious gap, what we will see before we see continuation in the move, the market will drop into that gap and we'll see consecutive runs on sell side inside of that gap before it makes some kind of continuation move. So in this case, I note the formation of the 5-minute BISI, and I'm waiting for the market to drop into it, make a low, turn away from it, drop into it, take that low again, turn away from it, then drop, take that low again, and then continue. That's what I'm looking for. I've seen this happen so many times over and over and over. When the market leaves an obvious gap, we're bullish. This is what it does. It will push into that gap, make a swing point, turn away from it, entice longs. This is how I think of it when the market's doing something like this. And in all honesty, it's what? A bull flag, right? But this is what I think is going on behind the scenes, just putting the logic behind it, because there has to be some kind of why behind it. It doesn't matter how you trade. There has to be some kind of logic behind the way that you trade, right? My logic here is 5-minute fair value gap. We drop into it once, we trade away from it. As soon as we start turning away from it, this is enticing more longs. People were trying to get in line with this move, right? Everybody sees this move on the left side of the chart. Everybody wants to be a part of that move. So as soon as we drop into the fair value gap, turn away from it, in my opinion, it's just my opinion. It's just the way that I see the market. This doesn't mean this is actually what's going on behind the scenes. But we turn away from it. It's enticing longs. They're going to put their stop loss below that swing low. Boom. Take them out, absorb that liquidity, accumulate that liquidity, and then they do it again, right? Swing point here, taken, boom. Turn away from it. At this point in time, some of you guys may have even bought this shit. Turning away from it, enticing longs. Okay, we're going higher now. We're seeing continuation. Stop loss below this low. Boom, take them out again. So I'm just sitting here watching this. This is that level from the daily chart. This is literally that level. Pull up a daily next to this right here. And look how the market is using that level. Where do the bodies close? Do they close above it? This is a 1 minute time frame. This is the crazy part about it, that like ICT concepts, they fucking work. This is literally a random discount wick from 21 days ago. And this is how the market's responding to it on a 1 minute time frame. Like, what the fuck? That doesn't make sense. Why is the market doing this? There has to be something going on, in my opinion. You see where the bodies of the candles are closing above it. That's bullish. After we have done one run here, 2 runs, 3 runs, 3 consecutive runs on sell side. It's literally what we did in the overnight session, right? Markets are fractal. It's the same thing that happened in the overnight session happening again. 1, 2, 3, up. So again, on the 1 minute time frame, 1, 2, 3, up. But in this case, we have a 5 minute buy side melt, sell side efficiency, and also that level from the daily time frame to support the idea. And then inversion fair value gap. Now I'm viewing this as 100% manipulation, buying the inversion fair value gap in the price leg that removes liquidity from the marketplace. And look what we leave behind. Look what we leave behind. Relative equal highs before the drop down. So everything is there. Everything makes sense. And I simply just buy the market there. Let me sign in. I just buy the market there, and I literally just take off for a fixed 4R, or what I thought was a fixed 4R, but I never actually ended up getting the 4R because I sold at the market. So boom, as soon as that gets inversed, and this is what's going on in my mind as soon as that gets inversed. I'm waiting for this to become inversed. Once it becomes inversed by the close of a candle, that confirms that we are now in a buy program, and I can buy the inversion fair value gap. Where's my stop loss going to go? It's going to go below this right here, because I have done the work of back testing and figure out where my stop loss has to go when I'm buying inversion fair value gaps. If there's a small imbalance, I have to allow for the market to trade down into that. It could potentially stab into that on a wick, but it's not going to violate the low of it. And the only reason I know this is because of work that I've done through back testing. So my stop loss goes right here, and I literally just get out at a 4R, and that's it. Just be done. So at this point in time, I'm thinking, like, where can I take profit? I really have nothing to take profit, because the next objective from this is very, very, very far off. See, at one point in time, I'm zoom out, right? This is the next objective. It's literally 900. It's 300 handles away. So I'm not just going to swing one contract for 300 handles, which is literally what I've done. That has been plaguing my trading, just going for these big-ass swings. I literally just get in and get out in like 2 minutes, and then I'm done. It's easy. I see one candle, one large up candle prints in my favor, a second large up candle prints in my favor. Yep, that's it. Okay, I'm good. Done. That's it. That's it. If I can trade like this, I can be profitable, because I have the experience. I have accumulated the experience over almost 3 years now to read the market very well. And I can do things like this consistently. All I have to do is just take what the market gives me. That's it. That's fucking it. And this makes trading so much easier than what I've been doing. What I've been doing makes it harder. So, only thing I will mention that I could have done differently was, you can see that I initially had a buy limit order here at the upper quadrant of that 5 minute gap. And I actually removed that because I thought that this might not get filled. So I'm looking at the market as it dries below this low. Again, this is literally just something that I've seen happen over and over again. It literally happened yesterday where we have an obvious gap. The market will drop into that, make a low, turn away from it, drop into it again, take the sell side there, turn away from it, and then drop into it again, third time, take the sell side there, then make the real move, then we see continuation. So this is what I'm watching for. As it does it here, I'm noting we have a little bit of discount sensitivity there, a little bit of a reaction there. We start to turn away from it, so I remove the buy limit order there. Although, had I just left it there, that literally would have been the perfect fill, and I would not have to even buy the inversion fair value gap. So only thing that I would have done differently today, but overall, it's a solid day. Again, messed up here. Why am I selling the market if I'm bullish on the day? But this is a solid trade. This is the real way of getting on side, and this only comes after 10:30. Once we have a rebalance into the 15-minute fair value gap. So another reason why I was kind of in and out was because I'm noting the formation of this 15-minute BISI. I'm noting the potential to drop it back into that, rebalance that, and then continue. Where I bought the market, you can see the little marker right there, right? This would just be assuming that the market's just going to open here and continue right from there and never see a discount and just keep trading higher, which can happen. It can just keep running, but probabilities point to the likelihood of a rebalance here. That's typically what happens. More often than not, we do rebalance that gap and then continue. We don't just keep running straight, in a moonshot rally, things like that. So I think that's going to be it for this one. I think I covered about everything. Overall, a decent session. I mean, I'm resilient to loss. I'm just trading in a demo account, so nothing really fucking matters. And I'm just going to continue trading in a demo for the rest of this week and then see, like, okay, am I in sync with the market now? How do I feel? Am I good? Am I willing to go back onto the Express funded account and try that? What I was thinking about doing was just simply opening up another evaluation account and trading that and seeing how that goes rather than just demo trading. But it really doesn't matter. There's no rush, and that's the thing. Like, the faster you get there, the faster you're going to dig yourself in a hole in the opposite direction. Just take your fucking time. It's going to take years. There's no rush to want to get in there and make money. Like, you're good. Calm down. You'll get there. I promise. It's going to take a lot of fucking time, and that's the hardest pill to swallow. But you will get there, and I know that. So, as of this one, I'll talk to you guys tomorrow.